Have we all just witnessed the death of the DSCR loan program? And for those of you who need a refresher, DSCR stands for Debt Service Coverage Ratio. And over the last number of years, the DSCR loan has been the absolute toast of the town for investors who specifically focus on buy and hold strategies. And the DSCR loan program allowed them to acquire properties and keep properties in their portfolio and provide them with a 30-year fixed rate loan that is heavily based off of simply the income of the property. You're cutting out a ton of red tape that you would normally deal with when you're talking about comparing a DSCR loan to a bank loan or a conventional mortgage. But with the interest rate environment that we're in right now, the last 60 days has been pretty difficult, especially for the DSCR loan. We've seen interest rates go up on base rates in excess of 2% over the last 45 to 60 days. And with base rates starting at low to mid sevens, it begs the question, is the DSCR loan going to be around very much longer? Now, my initial thought is that of course it will be. In one form or the other, the DSCR loan does attack a need in the market. It allows clients to be able to be financeable on a long-term loan option that maybe they would not otherwise be able to get from a bank or a conventional lender. So it does still attack that particular need in the market. But I think it's going to be tough sledding in the near future for DSCR for reasons that you may not really think about right now, none of which have to do with interest rates. See, interest rates are going to be where interest rates are going to be. Nobody really controls that. So although there may be volatility in price and sticker shock right now, at some point we have to believe that all of that emotion will get priced into the market and it will become a new norm that higher interest rates are here to stay. But there are two reasons why I think the DSCR is going to struggle in the short term. Number one, every DSCR loan that we've seen so far comes with a standard 5-year prepayment penalty. It's a step down prepay, meaning 5% penalty in year 1, 4% in year 2, 3% in year 3, and so on. That's a pretty extensive penalty. And with interest rates in the 7s or 8s, maybe even a little bit higher, it's a very tough sell to a client, and justifiably so, that they should lock themselves into a long-term loan with a 5-year prepay in today's current interest rate environment. Now, you may have a crystal ball with it, which I don't, and you may think interest rates are only going to keep going up over the next 2, 3, 4 years. On the other hand, you may have a crystal ball that says that interest rates are going to go down. So wherever you fall on that spectrum, we have no idea. It makes me a little uncomfortable to push the DSCR with that lengthy of a prepay. And secondly, and just as importantly, with DSCR loans, you have the ability now to do a rate lock. However, the point in which you are able to do the rate lock is so far along in the process, it makes it very difficult for companies like mine to be able to properly price out a loan to a client on day one. Most rate locks are available in the underwriting stage or the review document stage, meaning us as a lender, we have to get everything in the file. Application, bank statements, and appraisal typically from an AMC, leases, verifying rents, so on and so forth. Prelim, escrow, yada, yada, yada. And with that being said, just based on timelines for appraisals, you're usually looking at a 2 to 3 week lag time. We had a file within that 2 to 3 weeks change pricing 3 times in the last 45 days. And with rates where they are right now, we've seen just as many price change emails and updates to pricing come out to us in a very short period of time. So as a lender who takes a lot of pride, Brad and I, in being able to disclose the loan properly, it is very difficult for me to look a client in the eye and say, your loan is going to look like X today, knowing very well that that is most likely going to change and possibly change multiple times by the time we get to a point where we can get loan documents out. So once the price shock gets out of the market and interest rates are here to stay, I think the DSCR loan is going to be an option for people moving forward. But until they address the prepayment penalty, the length of that, and the ability to lock the rate at maybe an earlier part in the process, I'm having a difficult time thinking that their volume is going to keep up with what they had prior to this most recent rate increase. So if you have any questions regarding the DSCR loan, if you want to take a look at some hard money bridge loans, we believe the fix and flip business is going to be picking up quite a bit. A little bit of softening in the market with the interest rates where they are might allow clients to get their foot wedged into that door and get an offer accepted. Give us a call, visit our website, slcapitalgroup.com. Thanks again for watching, and we look forward to hearing from you.